Consistency doesn't come from willpower. It comes from routine. And the routine that works has three parts: pre-market, during market, post-market. Most traders only focus on one, usually during market. That's the mistake. You need all three. Each part serves a different purpose. Together, they create the system that makes consistency automatic. Pre-market routine. This is preparation. You're setting up your psychology before money is at risk. Check market context. Review your plan. Check your emotional state. Set your daily loss limit. Write down your best setups. This takes 15 minutes. But those 15 minutes determine whether you trade prepared or reactive. Prepared traders follow plans. Reactive traders chase price. What you're doing mentally. You're shifting from survival mode to analytical mode. Your brain defaults to reactive when uncertain. The routine overrides that default. You're telling your brain this is planned, not spontaneous. This is execution, not improvisation. That mental shift shows up in every decision you make once the market opens. During market routine, this is execution discipline. You see a setup. Before you click, run your checklist. Is this my setup? Correct position size? Entry where planned? If yes to all three, take the trade. If no to any, wait. The routine creates space between seeing opportunity and acting. In that space, emotion loses control. Logic takes over. The key is non-negotiable rules. If your routine says check three things, you check three things. Every trade, no exceptions. Not when you're up, not when you're down, not when price is running. Every single trade. That's how the routine becomes automatic. Repetition without exception. Your brain learns the pattern. Eventually, you can't trade without the routine. It feels wrong. Post-market routine. This is learning. You review the day. Not just P&L, your execution. Did you follow your plan? Where did you break it? What triggered you? What went well? You're collecting data on your psychology. Over time, patterns emerge. You break rules when frustrated. Chase when bored. Size up when overconfident. Those patterns show you where to build better systems. Here's why you need all three. Pre-market sets you up. During market keeps you disciplined. Post-market builds improvement. Without pre-market, you're reactive all day. Without during-market routine, you make emotional decisions. Without post-market, you repeat mistakes forever. Each part reinforces the others. Together, they create the consistency loop. Practically. Pre-market, write three setups you're watching. During market, only trade those three. Post-market, review whether you stuck to them. Simple, clear, measurable. That's a complete routine. And if you run that routine daily for a month, your execution quality will improve. Not because you got smarter, because you built a system that reduces emotional decisions. Most traders think the problem is finding better setups. Wrong. The problem is executing the setups you have, inconsistently. Sometimes you follow your plan, sometimes you don't. That inconsistency kills edge. Your strategy might have 55% win rate, but if you only execute correctly 60% of the time, your actual edge is closer to break even. The routine fixes execution. Better execution reveals your actual edge. Here's the compound effect. Week 1, you remember your routine 70% of trades. Week 2, 85%. Week 4, 95%. By week 8, it's automatic. You don't trade without it. And because your execution is consistent, your results become consistent. You're no longer swinging between great weeks and terrible weeks. You've built a baseline. That baseline is built on routine. The routine doesn't guarantee you win. It guarantees you're prepared. Preparation is the only edge you control. You can't control if this setup works. You can't control if the market trends today. You can control whether you run your routine, whether you check your plan, whether you review your execution. That control compounds. Over time, it becomes the foundation of consistent performance. Build your three-part routine. Pre-market preparation. During market execution checklist. Post-market review. Keep it simple. Make it non-negotiable. Run it daily. And trust the process. Consistency doesn't come from talent. It comes from routine. And routine is something you build one day at a time.